Hey, what's up guys, John here. Container rates are now over $10,000. Now at the peak of all the mania in 2021, it was the same exact number, $10,000. That was peak inflation. But when you look at what's happening right now with global trade, you're going to see something very, very clear. That inflation is about to get out of control. And I believe with it, Jerome Powell may do something radical. I'm going to show you exactly what's going on here, because this, I believe, is going to change everything we know about the economy. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's going on. And if you'd like to fix your credit to position yourself for the greatest wealth transfer in American history, we'd love to help fix your credit at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, container rates hit $10,000 as ocean freight inflation soars in the Red Sea crisis. More ships to avoid Red Sea as attacks disrupt world trade. This came out just a couple hours ago. Now look at what happened with container freight rates. Container freight rates have increased substantially on most trade lanes in the past 2 years amid the pandemic based on aggregated data. Now look at this. 2021 shipping rates on a 40-foot container cost roughly $10,400. In 2022, it was roughly $8,200. So we're seeing a situation where we might pass 2021 shipping rates. What does that mean? It means prices of everything are about to get out of control. Remember how expensive things were back then? Even today, still things are very, very, very expensive. But when you look at how this is all going to play out, it says everything. The sudden jump in ocean freight and its inflationary impact also depend on the duration of the vessel rerouting and the length of the time shippers pay the higher freight cost. Logistics CEO tells CNBC once the timeline hits 1 month mark, inflationary pressures will be felt and seen in the supply chain and eventually the consumer level. CNBC previously reported that MSC, the world's largest ocean carrier, was the first ocean carrier to increase rates from India by 30 to 40%. To many, the jump in rates from India to USEC, U.S. East Coast, from approximately $2,000 per 40-foot container to $7,000 per 40-foot container in just 30 days appears egregious. Is this rate increasingly really level required to recover costs, or are they simply taking advantage of an unfortunate situation for the entire global community? Now, when you look at where consumers stand right now, they're to their teeth in debt. Student loans just announced October 1st. Many people are maxing out their credit cards. Average American has over $6,000 in outstanding credit card balances. And when you look at where interest rates are right now on these credit cards, you're going to see something very, very clear. That consumers are not going to be able to eat this inflation. We're going to start to see more and more and more defaults on debt obligations, bills, student loans. People are going to, unfortunately, they're going to have to pay these high prices if they want food from the shelves. And so you have to ask yourself, what is Jerome Powell going to do about this? Because he says he wants to bring inflation to 2%, and when they see inflation start to move up, how can he pivot? That's the big question. How is he going to pivot? He said that he won't hesitate to raise rates again if necessary. He said that last month. He will not hesitate to raise rates again. So look at this. Bear said shippers need stable pricing and vibrant economies to generate demand. MSC did not immediately respond to a request from CNBC for comment. Now, logistics CEO have spoken to CNBC, say that they would be more transparency on cost increases since the ocean carriers are no longer paying the $500 to $600,000 toll to pass through the Suez Canal. Retailers, look at what this retail CEO said. Retailers at the American Apparel and Footwear Association are closely watching the situation in the Red Sea. They are urging the full and immediate deployment of Operation Prosperity Guardian to ensure the protection of the vital waterway. With 98% of apparel imported, it is absolutely essential to have safe and affordable shipping. I would urge people that if you need something, you probably want to get it now. If you're going to need it a month, 2 months, 3 months, you know you're going to need it. It might make more sense to buy it now because I don't think prices are going to be coming down in the short term. That's for sure. He alluded to 2021 Suez Canal obstruction as for an example of how many the disruption trade gateway has immediate implications for the delivery and cost of goods. He goes on to say that the supply chain and customer policy for the National Retail Federation said its members continue to work with the ocean carrier partners to address the ongoing situation in the Red Sea. So you have to ask yourself, if they're likely going to continue to increase the rates, and then it's going to go into a situation where Jerome Powell may be forced to increase interest rates, what will be the net impact? Because how they calculate CPI is they take an average weighted cost of a basket of goods in a given month and divide it by the same basket the previous month. To me, that signals we could be walking into a situation where they're going to likely increase interest rates in January. And if you look at where the consumer went in August of 2021, $2.1 trillion in excess savings. Now it's about $150 billion. They're burning over $75 billion a month. This does not factor in for student loans. So when you look at what's happening, you're going to see a situation where come late this month, early next month, consumers are going to be out of money. Consumers are going to be out of money, and as they increase interest rates, the cost to service that debt is going to get more and more and more expensive. Now, what I personally believe we're going to start to see here is a scenario where this is going to be much longer than people anticipate. Some people might think, hey, this is going to be a week, a month, 2 months. If you look at the chain of events that we've walked through over the last 6 months, overseas, one disaster, one fight, one problem after the next, this thing isn't going away. We're walking into a problematic situation. We're already kind of in it, but we're walking into the real problem. The last couple of years have been propped up by cheap money, and consumers have bitten off a lot more than they can chew. They weren't anticipating that inflation would get much, much, much worse, and the cost of living would get much, much, much worse. But unfortunately, it looks like that's exactly what's happening. Now, when you look at, the options that they provide you is that, they can fly items. But ultimately, they don't have any real solution. The solution is that they're going to end up spending a lot more money to get items here. 158 vessels diverted from the Red Sea holding $105 billion in trade. As of Thursday morning, 158 vessels are currently rerouting away from the Red Sea, carrying over 2.1 million cargo containers. CNBC says the value of the cargo based on MDS Transmodel estimates $50,000 per container is $105 billion. IKEA is among one of the companies to indicate that trade diversions will impact product availability. It told CNBC that while it does not own any container vessels, it is working with transportation partners to manage shipments and to ensure the safety of the people working with IKEA's value chain. What we can share for now is that the situation in the Suez Canal will result in delays and may cause availability constraints for certain IKEA products. This is a main priority. In the meantime, we are evaluating other supply options to secure the availability of our products, and we continue to monitor this situation closely going forward. So, could we see a situation where we start to see more shortages? Is this a reality? Remember we saw that in 2020 and 2021, where people were binge buying. I personally believe if we start to see these headlines continue to hit, we're going to start to see people buy a little bit more than they otherwise would. And if they can't restock those shelves like they were able to last month, it's going to be a very, very, very big problem. I believe now is probably the best time if you're looking to get, some toothbrush, maybe some shoes, some shirts. If you need to get some small items, not saying go panic buy, not saying that at all. But if you need to get things that you're going to need in, next month, 2 months, 3 months, probably make more sense to lock in today's prices than tomorrow's prices. Now, I personally believe we're walking into a situation where Jerome Powell is likely going to increase interest rates. I don't think he's done. I don't think he's done by a long shot. I think many people believe that he was going to start to pivot January of 2023. In about a week and a half, that will mark a 1-year anniversary since millions of people thought that Jerome Powell was already going to pivot. A couple weeks ago, everyone thought Jerome Powell was going to pivot again. Then he came out just a couple days after that saying there's no pivot in sight, and the thought of that is just premature. But then when you look at this situation, you can see very, very clearly how the new inflation CPI data could indicate that inflation is going to get worse and that interest rates are going to likely get higher and stay higher for longer. But then the big question is, what will be the impact to commercial real estate? Because a lot of commercial real estate, over $1 trillion has to get refinanced next year. $2 trillion in corporate debt has to get refinanced. So much debt is rolling over starting next year. If he continues to increase interest rates, we're going to see a massive rug pull on residential and commercial real estate. We're going to see a massive rug pull on the everyday American consumer. What do you think about this situation? Drop below. You think we're walking into a Fed pivot? or you think we're going to see inflation get much, much, much worse? If you'd like to fix your credit to position yourself what I believe is going to be a massive wealth transfer in America's economy, if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free strategy session. Catch you in the next video.